For the past 12 years, I've dedicated myself to the world of finance and money management. I hold a bachelor's degree in business administration and built my career in accounting. Throughout this journey, one of the most life-changing skills I've learned has been how to manage my personal finances, recognize my bad money habits, and break free from them. In this video, I'm going to talk about the 8 most common bad money habits that hold people back and how you can overcome them. I'm Ryan Carter. Welcome to Fine & Coon. My goal is to share my experiences and help you improve your personal financial management as much as possible. Don't forget to subscribe to the channel. Now, let's get back to the topic. The first bad money habit is investing only if you have money left after paying your bills. This is a huge mistake. I first read about this in Robert Kiyosaki's book, Rich Dad, Poor Dad, and it's one of the cornerstones of achieving financial freedom. Robert explains that people generally fall into 2 categories when it comes to handling their money. The first is the habit of poor people, investing only with whatever money is left over. In other words, as soon as they receive their paycheck, they pay rent, phone bills, subscriptions, credit card payments, and then save whatever remains if anything is left to save at all. The second method is the habit of wealthy people, and they do the exact opposite. First, they set aside a predetermined amount of money and transfer it directly into their investment accounts. You should treat your monthly investment amount like a mandatory bill and deposit it into your investment account immediately after getting paid every single month. This point is extremely important. Do not skip it. The second bad money habit is becoming comfortable with bad debt. Nowadays, borrowing money has become normalized. People finance even the smallest things with debt gifts, clothes, and unnecessary purchases. I have one strict rule. If I can't afford to pay for something in cash, I shouldn't buy it with debt. Remember, credit card companies profit when your financial situation gets worse. The average credit card interest rate is around 22%, which can easily wipe out any rewards or benefits those cards offer if you fail to pay off your balance. The third thing you should do is this. First, build a 6-month emergency fund by setting aside a fixed amount of money every month. After creating this financial cushion, you can start investing in your investment fund. Don't let your money die sitting at home doing nothing. Fourth, you need to clearly understand your income and expenses. If you don't know your starting point, you can't calculate how to reach your destination. There's something called lifestyle inflation. As your income increases, your spending increases too. The more money you make, the more you spend, and it becomes a cycle. You earn more, buy a bigger house, upgrade to a newer car, and keep increasing your expenses. Once you enter this cycle, it becomes very difficult to move forward financially. People who understand their assets and liabilities, who have clear financial goals, and who know the exact steps needed to achieve them are far more likely to build wealth than people who simply dream about money without understanding how to earn, manage, or grow it. Just becoming aware of your financial situation and seeing the numbers clearly in black and white can motivate you to take action. The fifth bad money habit is having expensive hobbies. Many people love shopping. As they earn more, they spend more because it makes them feel rich. But if you truly want to improve your financial situation, your goal should be to save and invest more, not spend more. Remember, if a $10,000 investment generates X dollars per month, then a $100,000 investment can generate 10X dollars. If you keep earning more and spending more, you'll never build real wealth. I'm not saying you should never spend money, enjoy life, or have fun. I'm simply saying you need to find the right balance. The sixth bad money habit is not knowing what you actually need. For example, paying for a gym membership you only use once or twice a month, or keeping a Netflix subscription when you only watch one movie a month. My advice is to create a list of your recurring monthly expenses and do a simple cost-benefit analysis in your head. Avoid spending money on services you don't use enough to justify the cost. Seventh, paying too much in taxes. Taxes will likely become one of the biggest expenses in your life. Everyone has to pay taxes, but many wealthy people hire tax advisors to help reduce their tax burden legally. If you want to get ahead financially, one of the best things you can do is learn how tax rules work in your favor. For example, by investing through accounts like an ISA or a Roth IRA. Even if you disagree with this perspective and prefer paying more taxes regardless of legal tax-saving opportunities, it's still important to understand tax laws. Don't break the rules, but do learn how to reduce your tax bill legally so you can use that money to support causes and values that matter directly to you instead of letting others decide where it goes. The eighth point is waiting too long to invest. Once you begin saving and build the financial cushion we talked about earlier, you'll want to start investing so your money can begin working for you. You should also diversify your investments so you can better handle different situations and challenges in life. But you should avoid leaving too much money sitting in a bank account because of inflation, which essentially means your money loses value every year. That's why I personally keep a mix of safer investments alongside riskier investments that I'm prepared to lose money on. Once you've saved enough, start exploring different investment strategies and avoid keeping excess money sitting idle in the bank. There will always be reasons not to invest. You don't have enough time, you don't have enough money, or you don't know where to start. But the longer you delay investing, the harder you'll have to work later to earn that same money. The earlier you start, the faster you'll see results.